Banks made $268 billion in profit last year, and a disgusting amount of that came directly from you. Not through fair business, through tricks, hidden fees, and secrets they pray you never figure out. Today, I'm exposing 4 money secrets banks don't want you to know, the exact tactics they use to drain your account, and how to flip the script so you stop paying and start winning. Let's get into it. Before we start, I need you to understand something. Banks are not your friend. I know the commercials show happy families and golden retrievers. I know your banker smiles and calls you by your first name. But behind that smile is a business model designed to extract maximum money from you while giving minimum value back. JP Morgan Chase made $58.5 billion in profit last year. That's billion with a B. That's not charity. That money came from somewhere, and that somewhere is your pocket. So let's talk about how they do it. Secret number 1, overdraft fees are rigged against you. Banks collected $12.1 billion in overdraft fees last year. $12 billion from people who were already broke. Think about that. The fee for not having money is giving banks more of your money. But here's the part that should make you angry. Banks don't process your transactions in the order you made them. They reorder them to maximize fees. Let me explain how this scam works. Say you have $100 in your account. You buy coffee for $5, then lunch for $12, then gas for $40, then your rent autopay hits for $800. Logically, you'd expect the coffee, lunch, and gas to clear fine. Then one overdraft fee for the rent, right? Wrong. Over 40% of banks process transactions from largest to smallest. So they run the $800 first. Now you're negative. Then they charge you an overdraft fee for the gas, another for the lunch, another for the coffee. 3 overdraft fees instead of 1, because they rearrange the order of your transactions on purpose to charge you more. The average overdraft fee is $26.77. Some banks still charge $35. Get hit with 3 of those in a day, and you just lost over $100 because you were $5 short on coffee. And here's the really messed up part. Studies show 8% of account holders pay 80% of all overdraft fees. Banks know exactly who their repeat victims are, and they design systems to keep extracting money from them. 21% of Black Americans paid overdraft fees last year compared to 6% of Asian Americans. 19% of people earning under $50,000 paid them compared to 6% of people earning over $100,000. This isn't random. This is a system that disproportionately punishes people who are already struggling. The fix? Set up low balance alerts. Link a savings account for overdraft protection, or switch to a bank that eliminated overdraft fees entirely. Capital One Ally and many credit unions don't charge them at all. Secret number 2. Your savings account is a joke and banks are laughing. Chase Bank of America and Wells Fargo all pay 0.01% interest on savings accounts. Let me put that in perspective. If you have $10,000 in a Chase savings account, you earn $1 in interest per year. $1. You can't even buy a coffee with what your $10,000 earns in 12 months. Meanwhile, high-yield savings accounts at online banks pay 4 to 4.5%. The same $10,000 earns $450 per year. Same FDIC insurance, same safety. 450 times more money. But wait, what does Chase do with your $10,000? They lend it out for mortgages at 7%, car loans at 8%, credit cards at 24%. So your money earns them $700 or more while they pay you $1 single. That is the business model. Your financial ignorance is their profit margin. And no one at the bank will ever mention high-yield savings accounts to you. There's no law requiring them to. And telling you would cost them money. Americans have roughly $11 trillion sitting in savings accounts. If even half of that is earning near 0% instead of 4%, the collective opportunity cost exceeds $200 billion per year. That's $200 billion in interest that should be going to regular people, but instead just doesn't exist because banks don't tell customers better options are available. The fix? Open a high-yield savings account today. Ally, Marcus, SoFi, Discover. They all offer 4% or higher. It takes 10 minutes. Your money works exactly the same way, but earns 400 times more. This is free money you're leaving on the table every single day you don't make this switch. Secret number 3. Everything is negotiable, but banks hope you never call. This one blew my mind when I learned it. A 2025 study found that 83% of people who called their credit card company to ask for a lower interest rate got one. 83%. The average reduction was 6.7 percentage points. Let's do the math. Say you have $7,000 in credit card debt at 27% APR. That's the average rate right now, by the way. If you call and get it reduced to 20%, you save over $1,600 in interest. One phone call, 5 minutes of mild discomfort, $1,600. But it gets better. 95% of people who asked for annual fee waivers got them. 89% who asked for late fee waivers got them. Banks have retention departments whose entire job is to keep you happy when you threaten to leave. And yet only 25% of cardholders have ever tried negotiating. The most common reason people don't ask is they didn't know they could. Banks are counting on your silence. Every person who doesn't call is pure profit. Here's the script. Call the number on the back of your card. Say, I've been a customer for X years. I've been offered better rates elsewhere, and I'm considering switching. Is there anything you can do to lower my APR? That's it. Will you feel awkward? Maybe. Will they say no? Sometimes. But 83% of the time, they say yes. And that yes is worth thousands of dollars. The fix? Put it on your calendar. Once a year, call every credit card you have and ask for a lower rate. Call your insurance company. Call your internet provider. Everything is negotiable when you're willing to ask. Secret number 4. The credit score system is designed to keep you paying. Let me tell you how this game actually works. Your credit score determines what interest rate you pay on basically everything. Mortgages, car loans, credit cards, insurance, even apartment rentals and job applications now. A person with a 620 credit score pays about $165 more per month on a mortgage than someone with a 760 score. Over 30 years, that's nearly $60,000 in extra interest. On the same house, same loan amount, just a different 3-digit number. People with lower credit scores pay approximately $3,400 more per year across all their loans and insurance. Over a lifetime, that adds up to over $100,000 in extra costs. And here's the twisted part. The credit scoring system is run by a company called FICO that makes $2 billion a year selling your scores to lenders. The same lenders who benefit when your score is lower and they can charge you more. There's also a myth that carrying a balance improves your credit. This is completely false. But it generates billions in interest for banks, so it persists. You don't need to carry a balance. You don't need to pay interest ever. Pay your full statement balance every month and your credit score will be fine. The banks who told you otherwise just wanted your interest payments. Another thing banks don't want you to know. You don't have one credit score. You have up to 28 different FICO scores for different purposes. Banks can strategically choose which score to pull to justify charging you a higher rate. The system is opaque by design. You can't easily see all your scores. You can't easily challenge decisions, and you remain dependent on credit products to maintain the score you need to borrow affordably. The fix? Check your credit reports for free at annualcreditreport.com. Dispute any errors immediately. Keep utilization under 30%. Pay on time every single time. And never carry a balance thinking it helps your score. That's a lie banks profit from. Let me give you a bonus secret because I'm feeling generous. Free checking isn't free. Before 2010, about 76% of banks offered truly free checking. Today, it's around 30 to 40%. Banks lost billions when regulations capped debit card fees, so they shifted costs to you. The average monthly maintenance fee is $15.65 for interest-bearing checking. You need to keep over $6,000 in the account to avoid it. That minimum balance requirement doubled in just 2 years. ATM fees hit an all-time high this year at $4.86 per transaction. Use an out-of-network ATM twice a week, and you're paying over $500 a year just to access your own money. When you add up monthly fees that kick in when your balance dips, ATM charges, occasional overdrafts, paper statement fees, and the opportunity cost of earning 0.01% instead of 4%, a typical free checking account costs $400 to $600 per year. Free, sure. The fix? Switch to a truly free checking account. Capital One 360, Ally, SoFi, most credit unions. No monthly fees, no overdraft fees, large free ATM networks. Your checking account should cost you literally $0. Let me bring this all together. Banks made $268 billion last year. That money came from overdraft fees designed to cascade. Savings rates 400 times lower than what's available. Interest rates that are negotiable but never disclosed. Credit score systems that keep you paying more. And free accounts that cost hundreds per year. None of this is illegal. It's just legal exploitation of people who don't know any better. But now you know better. Switch your savings to a high-yield account. That's $450 per year on just $10,000. Call to negotiate your credit card rates. That's potentially $1,600 or more saved. Avoid overdraft traps with alerts and linked accounts. That's hundreds saved. Move to a truly free checking account. That's another $400 to $600. Add it all up, and we're talking $2,000 to $3,000 per year you can stop giving to banks and start keeping for yourself. The banks are not going to tell you any of this. They make money when you stay confused. They profit when you stay passive. They win when you don't ask questions. But you just watched this video. You're not confused anymore. You know the secrets. Now go do something about it. If this video just saved you money, hit that subscribe button. I expose the financial tricks that keep regular people broke every single week. Comment below and tell me which of these secrets surprised you the most. I read every single comment. All right, go get your money back. I'll see you in the next one.